What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 24th, 2021. Please go ahead and click the like button on this video if you enjoy this content, and I will go ahead and keep creating it for you. Today we're going to talk about the price action in the indices. We're going to go under the hood and we'll check out our sectors and style factors as we always do. We'll talk about the blow-off move in Roblox, and we'll go through some options order flow as well. Before we jump into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right in here. And today, a really bullish day in the indices. We had the S&P 500 close up 1.02% as measured by the SPY. We had the NASDAQ QQQ close up 1.68%, a little bit off the highs today. We had the IWM small caps finish up 0.65%, and we had the Dow Jones once again lagging up 0.56%. This is the ES right here. This is the daily chart. And you can see we had a ton of chop over the past 2 months. So really the second half of April all the way into the back half of May, it's just been this sideways chop. And of course, there was a lot of fear in the market coming into this week, a lot of indecision, fear of tapering, fear of inflation, you name it. There was, just a lot of baggage amongst market participants. We had continued to hit resistance at around this 4180 level on the S&P 500, and I'll show you what I mean by that. So if you look, we hit resistance right around 4180, hit it again and failed, hit it again and failed, and today we actually got that nice breakout above this weekly value area high here. So we are looking pretty solid here on the S&P 500. You can see in typical fashion, the market closed pretty much right on the cusp of a breakout. So it closed almost directly on this value area high, but you can see we did get our breakout today. This kind of reminds me, we could definitely use this as a bit of an analog. So let's rewind the tapes back to February and March. So if you remember February, we actually had this, pretty violent corrective sequence here. I delineated this with this trend channel. Then it was like, oh my gosh, all right, we're rallying. We broke above this monthly value area and we just dipped right back below. We ended up with about 2 months of just kind of rolling around doing absolutely nothing. You can see from early February all the way into late March. But then we got that breakout from the monthly value area, and then it was off to the races after that 1.5 to 2 month period of consolidation. The interesting thing as well is once we get that 1.5 month period or 2 months of chop, then nobody really expects a breakout anymore. It's like, oh, this again, we're just retesting the top of the range. And you can see we had an incredible run right here. And then that's where we got back into our chop zone, which we've been in for the past month and a half. Could this end up being another one of those breakouts where we break out of this value area and then we actually start trending and running again? I think it's definitely in the realm of possibility. And so long as we are above this value area, that's my baseline assumption that we are going to start trending higher. Let's take a quick look at the NQ. And you can see here, NQ, this one had gotten demolished. We were in a downtrend in all these growth stocks and really technology as a whole. But you can see here, we just made our first higher low, and now we just made another higher high. We're above all the key moving averages, and it looks as though a test of this monthly value area low is in store for us. So that could happen as early as tomorrow. Maybe tomorrow we get some back and filling, but no matter which way you slice it, I think the technology stocks are looking a lot better. Let's flip over to the Dow Jones. The Dow Jones has been leading us for quite some time. Even when the market got pretty weak and choppy, You can see the Dow Jones, we're already trading above this monthly value area high. I personally am not really expecting the Dow to lead the next leg higher. I think it will be the technology stocks. But the Dow Jones, undeniably, it's still in a bullish trend, still looks very solid here. And then, last but not least, we have the Russell. Russell up 0.63% today. This one's kind of just, waffling around or floundering here. You can see, similar to the other indices, we've been going sideways, but this one more so. And this one, you can see we hit resistance at this monthly point of control, and we closed below the 20-day simple moving average. All right, so let's take a look under the hood here. We'll check out our market breadth, and you can see breadth was positive for all of the indices. This is actually a nice pickup in breadth. Over the past week or two, it really hasn't been that great. And you can see best breadth was in the NASDAQ QQQ, worst breadth was in the IWM small caps. Now, taking a look at our Finviz Heat Map, we can really see technology had a nice rebound. So Apple's up, Microsoft, Google, Facebook, Amazon, all those FANG stocks, even Tesla, which has been the canary in the coal mine. Tesla had their huge saga where, I was thinking like Elon Musk, this guy, is he about to get fired or something? They put Bitcoin on the balance sheet. Bitcoin ended up having pretty much a crash. We'll talk more about that. I actually added to some crypto exposure today. You can see even Tesla was up. And then the semiconductors were incredibly strong today. So Applied Materials, which I have on, was up 4.6%. And then NVIDIA, which I also have on, was up over 4%. The areas that lagged, you can see healthcare lagged a bit, utilities, and then I see some of these leisure names over here. Some of these like restaurants, etc. In terms of sectors, so let's see what did well today. The ARC Innovation Fund. And this is one, I have been talking about this for weeks now, of everyone thinking like, can you remember, just like rewind your clock like a week or 2 weeks ago? And everybody was like, Kathy Wood's gonna blow up. Like, it was this big thing as if she was gonna blow up. And I was looking and it's like, zoom out at her performance over like 1 year or 3 years or 5 years. But I think there's a lot of market participants that they're really just like monkey see, monkey do. And, you see somebody say something and then you just start repeating it. But yeah, this ARC fund, down here, it was like, she's going to blow up. Like, it's going to zero. And, at a certain point, you can own some of the best companies in the world. And if everyone piles into them because they realize you own all of the best companies in the world, you get, one of these blow off top sequences where it's like they just can't run in perpetuity. The businesses aren't changing that fast. And you can get an unwind, which is what we got here. But yeah, for people, I posted about this, like shorting this thing like 30% in the hole, it is what it is. So we'll see. Yeah, the ARC fund, not like it's making like a crazy move off the lows or anything, but it does look like it's putting in a base down here. I think it's a nice low to trade against. I actually took off my ARC calls today into this strength. But yeah, you can see the ARC funds did very well and the growth complex as a whole. And then some of these areas that did not do as well. Let's take a look. So we had the ARC funds do very well. Semiconductors do well. And then some of the laggards, we had the regional banks down 0.65%. We had utilities down. Solar stocks were down, but these solar stocks actually look very interesting to me. So I'll pull these up because I think these are actionable. Solar stocks. You can see they had a nice move off the lows, and now they just had 2 days of sideways consolidation. But yeah, they were laggards today. And then pulling up our style factors, you can see high beta was up 1.37%. We had the momentum style factor up 1.72%. We had the growth style factor up 1.39%. And then the main laggards, high div, low vol was the worst, and min vol. So that's actually like a very risk on market. That's a good thing when you see those style factors lagging. So let's take a look. We'll pull up some of my trades for the day today. And let me take some screenshots here. So I can just pull these up. Let me just screenshot all the winning trades and just remove all the losing trades. No, I'm kidding. Let's see. All right. So we got these here. And then we've got these. All right, so let's take a look. First trade that I did today, and we're not going to have time to run through all of these because that's just going to take, forever, but we'll run through the highlights here. So first trade I put on MSOS. This is the US cannabis ETF. This one, I had a lot of success playing the YOLO ETF via Leaps in 2020. We had this legalization tailwind behind us, and it didn't really come to fruition like a lot of people thought that it would in 2021. So you can see this sector really took a beating, but now it has transitioned from a downtrend into a neutral trend, and we actually have a potential legislative catalyst coming up as soon as this week. Chuck Schumer in the Senate could be proposing a bill related to the SAFE Act, which would allow, better access to banking for these cannabis companies. So I figured, hey, I'll put on these Leaps while the sector is a little bit quiet and while it's just kind of trending sideways. So I added that. I took off, I had some ARC calls for the May 28th expiration. I took those off. I had paid $230, or I had paid $210, excuse me, and I took them off for $230. I closed out the remainder of my Blade calls. I had these for August 21st, the 7.5 strikes. I had paid 69 cents for those. I took the remainder of them off for $155. I had taken one target, I believe, at like $175, and then another target, I believe, $195. And also, I had some TLT hedges on because I do own a lot of growth exposure, and in order to get even more long, I took those hedges off. So I had paid $295 for that hedge, closed out for $164, and yeah, I just said removing this hedge as a way to add to net long exposure. Because that's the thing as well, like if you have a couple of short positions on, like I think I had like 4 short positions on today, and then maybe like 14 longs or something like that. A lot of people, what they will do is they'll start being like, okay, let me just add more longs, and then they want to get shorter, and then it's like, okay, I'll add more shorts, and you can get your portfolio kind of tangled up. So in general, for the most part, it's a good idea. Like, let's say if you're long a bunch of stocks or like you're long a bunch of call options and you want to reduce your exposure, it's like rather than adding, just a bunch of puts, the first thing is like close out some of your longs. So same thing, I was like, I'll close out my TLT hedge. I got long a Roku call spread for June 4th, the 350 by 360 call spread for $4.45. And then Upstart, I tried this one with a small starter. And I'll go through this one because I think there's like a good, learning point here. So Upstart, this is a name, I have this on in the Pristine Capital long-term trend portfolio. And I got a good entry on this one. In my trading account, I never added it. So this is one where I was like, okay, it looks pretty good. It's already made a big move and it's pretty extended. And you can see like when I added this trade, I noted I put on a half position as it was pretty extended here. So I was like, let me participate and just see if this one makes, a real blow off move. So I got long at 160.96, so I got long right up here. And what I did was I was like, okay, we opened up right down here. I'll go long to see if we hit that R1 pivot level at 174, but I want to watch that opening price. And if we break below that, I know we are likely in trouble. And you can see how far away we are from these key moving averages. We're far away from this monthly value area high, and we're even far away from the 5-day exponential moving average. So I was like, okay, if we break that, I'll stop out. We broke that level. I ended up stopping out at 151.25. So took a paper cut loss there. Like I said, this one might need to consolidate or pull back. Made an exhaustion high. We'll revisit at a later date. And this one, I stopped out at 151 up here. Yeah, it's like right below the open. And this one, if you look what it did, a lot of times when you get those reversals off of highs, you can get a pretty violent unwind. So that's what we had today. This thing ended up closing down 9.15%. But in the grand scheme, this thing still looks fantastic. So if we get some sort of pullback or a consolidation, I'll be right back in here and give this another shot. Except this time not with a starter position, with an actual position. But yeah, really interesting learning point there. But this one still looks pretty fantastic. And the company's really good too, Upstart. I got long the Ethereum Trust for $24.65. And so I had stopped out of all my crypto exposures last week because I was like, this just doesn't really look like the best picture here. What I noticed though was over the weekend we had every chance to really slip into the abyss. We never did. And the other thing that I noticed is all these crypto influencers that are really like the thought leaders that essentially pump this stuff and that are leading the movement, you know, they're not going anywhere. They're still out there full force, even when this thing is really correcting, even when it's crashing. And the other thing I saw as well was Goldman Sachs was putting out research on Ethereum and Bitcoin even during this crash. So I saw like, okay, you know, we have Wall Street that's not backing down. We have these influencers in this movement which is not backing down either. So I was like, you know what, I'm going to get long some Ethereum. I think this really could be, we might look back and be like, wow, that was the buying opportunity in 2021. So I wanted to take advantage of that. And I was like, okay, I'm adding my Ethereum back. So yeah, that one already sitting on a decent gain for that. So really good. And then what else did we have here? And then I got long some Overstock. Overstock. Let's pull up Overstock. This one looks pretty interesting. Nice little breakout here. So breakout from this monthly value area high. Consolidating pretty tightly up here. It's not like it's blowing off or anything. And you can see we've been making pretty much this equivalent high. So we've just really been in this sideways trend. So I want to see, can we break beyond this 82 level? Can we actually start breaking levels and get up to this R1 pivot at a 95? So I added a position via common stock in Overstock. But I would be remiss if I did not talk about the elephant in the room today. My largest position by far, Roblox. Roblox, this one has been just an absolute ripper. So I'm long this one via call options, and I'm also long via common stock. And this one, it seems like Wall Street, you know, just figured everything out, you know, pretty much all at the same time. I had been accumulating this stock in this initial IPO base right here. I got really interested in the company. And what's so funny is like over the weekend, I'll do a lot of deep dive research on companies. Sometimes I'll just like stay up literally like all night doing research. And this company really just fascinated me. And all the best names that I stumble into, they're always at like 1 o'clock in the morning on like Saturday night when I'm just doing research. And I'll start watching like investor presentations or CEO interviews. And this company, I was like, there's just something fascinating about this name. The valuation looks good. The story looks good. I love the CEO. And this one, you know, it's on a tear. So we'll see. At this point, at $90, this is very similar to Upstart, where it is very extended at this point. My common shares, I hope I can just never sell them. I really think that this name could end up being a multi-bagger over the next few years. But that being said, you know, Rome wasn't built in a day. I don't expect this one to fly to like 120 in the next like 2 months or something. Like this is really fantastic gains. But we'll have to see. I think for like, I certainly wouldn't be like buying up here. If I were to add to my position, like I would really like to add on a pullback or something like that. But I have, you know, this is my largest position by far. So yeah, Roblox, awesome day for that one. Then real quick, we'll take a look at this options order flow. Let's pull this up here. All right, so I definitely noticed the options order flow has gotten more bullish. I was talking about this earlier in our afternoon webinar. So yeah, Twitter, this is another position I have on, one of my highest conviction names. Saw some bullish call flow. And you can see, we ripped higher today at 4.79% up to about 57 bucks. That one still looks very solid. You can see, as always, we have our index hedges. Nvidia, they announced their stock split and they have earnings coming up. And then one other one that really stuck out to me was this IPOE. You can see they're buying these January of 2022 call options in size. You can see another one came in right around the close. This IPOE, I believe they announced their earnings within the last couple days as well. And this one, it's trading up at almost $20 now. So this is definitely another one. I might take a look into this one a little bit deeper. Yeah, IPOE, they've been spamming calls in this one since we were trading, in this sideways base right here. So at this point, I'm not going to be rushing in with calls after like 6 green days, but yeah, really nice looking name here, IPOE. With that being said, that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all tomorrow.